Hello and welcome. Happy Tuesday, everybody, and welcome to Chart Request Live. We do this every week, not just once a week, but twice a week, every Tuesday and Thursday at 1 o'clock. We're here. This show is for the people. We're taking chart requests. We're paying attention to the chat. We want to talk about what you guys want to talk about.
Can I make a confession? Can I make a confession?
I was just about to introduce you, but you couldn't help yourself.
Who am I?
Confess.
I'm really in it for me. The people are smart people and they bring us some good ideas, and you know it too. So you laugh because you know it's true. Our audience has brought us great ideas in the past. So I'm in it for me.
I come on here almost every week and I say, this is my favorite show to do, right? Because not only is it super interactive, but we're being thrown tickers and chart request ideas of symbols that we've never looked at before. So that's
True.
awesome. Everybody's winning. Joined here today by my esteemed co-host. You can see us talk charts every morning on the morning show, 8:30 to 10 o'clock. Stock Market TV. JC, how is it going today?
I mean, listen, nice little Tuesday, low volatility environment. Of course, stocks have been trending higher, sector rotation, healthy consolidations, breadth expansion, participation around the world, risk off assets declining. I mean, that's been the trend, right?
Absolutely.
But I really like some of these ideas because what you said before, these are some names that we're not really looking at because, listen, we do a really nice job from a top-down approach to catch a lot of names. We have a ton of bottoms-up scans that find a lot of interesting ideas. And even still, there are names that slip through the cracks, just what it is.
So why do you have this PayPal chart up right now? You want to talk about it?
I have this PayPal chart. I'll tell you right now why I have it up, because Gerbier asked us in the email if we would take a look at PayPal. And you said that you're somewhat interested in this name. Tell me why. I mean, what's there to like about this?
So if I were to, I moonlight as a fundamental analyst. Not sure if you know this.
I heard that somewhere.
So if I were to put my fundamental hat on right now, PayPal has never been this cheap. This is a stock that people have chased forever. And it's in a 80%, I would have to check, 80, 90% drawdown from its highs years ago. And I think it's looking constructive. Talk about the levels that you've outlined here.
Yeah, I think 59 is probably a good level, right? That'll get you back above those May lows, right? Also back above those August lows, that last collapse. If you look at some momentum readings, there's not really much of a divergence on the daily. On the weekly, you didn't really have much of a divergence. You didn't get oversold on the weekly, but nevertheless, I think a squeeze could be on for these particular types of names. Now, if you want to get cute with me, I know sometimes Strez likes to get cute. You can overlay something like this where you're looking at like an arc, and they've moved together in the past, right? So this is arc overlaid here. So
there's a catch-up trade to be made here.
Yeah, maybe. I mean, listen, the correlation has certainly been there. You can't deny it. PayPal has been one of those, whether some of these names are not even in these ARC indexes. I believe PayPal is, or maybe Square is. I don't know. But either way, they've been moving together over the years. So when you see money flowing into this group of stocks, I could see, opportunities in PayPal, regardless of the fundamentals, mostly just from a positioning standpoint. And that's really just the way the market behaves. So below 59, it's messy. Probably want to leave it alone. But above 59, for a squeeze back up, towards, 70, 75. Yeah.
Yeah.
Only above 59, though.
And what if you were to zoom all the way out on that chart just to show how bad it's been for PayPal? Yeah. Ouch. So you would have to go back about 6 years to get this stock this cheap.
Yeah.
All right. So active chat today. We're going to get to all of these. I know JC is loving the gold talk lately. We have a question.
Why do you think I love it? Because I'm a retired gold bug?
You think you're retired?
Am I a retired gold bug? Yeah, that there's no way to go through life,
So Wavy
So I'm recovering gold bug,
recovering. That's better. Yeah.
recovering gold bug.
Wavy wants to know where your head's at.
I mean, my head is that it's probably going a lot higher. Is really where my head is at. Something that we've been talking about for quite some time. That real yields, really ripping is the worst thing for gold. I mean, it really was, and that's softened right now. The dollar weak, like these are all headwinds for gold. This is a huge base. I mean, we're long. I want to get longer at a breakout above 2100, like really, really long, like irresponsibly long.
Yep.
I have enough now. Listen, above 1900 is a pretty good level. For above that, I think you could stay long. Above 2100, I think you get longer. Target up near 2600, 3000. For sure. The dollar starts falling apart. And you also want to consider, on a relative basis, do you want to be in the gold, or do you want to be in the stock market? I had this. I guess I didn't. Here we go. So this is the rocks versus stocks. This is gold miners versus S&P 500. So you're not really getting dramatic outperformance there. So you want to think about what the opportunity cost would be in being in something like gold, as opposed to something like. Let's see, do I have? As opposed to being in something like stocks, right, which continue to outperform. So there's opportunity costs that you need to weigh in there, but just in a vacuum, on an absolute basis, regardless of what's happening around it, I like gold against 1900. I like it way more above 2100.
Flip back to the gold chart, zoomed out, almost 2 decades. It's what we call a base on base, right? This is a very bullish structure. Hold on. Yeah. Right. And you can paint it in different ways, just like you see there. The real level is 21, right? Like it's a very bullish long-term chart pattern, but we need that confirmation above those, multi-year highs. It's like,
I mean, listen, I like Ian's take. It's been messy, but I like Ian's take, at least right now, against the former all-time highs. Right. That's I don't disagree with that against these highs right here. You're above that. You got to be long.
Yeah, I do this a lot with different stocks. I look for levels to get in early, right?
Yeah.
Or jump the breakout. And they're giving you one very clearly right here around 19.
No doubt.
What do we got next?
CRS, Wavy.
Okay, we'll stick with Wavy. Yeah, CRS. What's this?
Dude, Wavy brings it every week. Wavy with the charge. So shout out Wavy. This is CRS. So this is a metal manufacturer, if I'm not mistaken. This is a Carpenter Technologies, 3.5 billion in market cap, metal fabrication. It's an industrial out of Philadelphia, city of brotherly love.
How about that?
Philly gets a bad rap. Philly's a good time, man. I like Philly.
All right, take it easy now.
I do like Philly. Philly's a good time. Listen, I know like you're a Giants fan. You're supposed to hate people from Philly or whatever, but that's stupid. Philly's a cool town. A lot of history there. If you're an American history nerd like me, and if you're a market participant, like you're a trader, an investor, and you're not a historian, what are you even doing? So just the fact that we know so much like market history and stuff, and like just understanding, revolution and everything is really cool. Food's good too.
Growing up where I did, a lot of field trips to Philadelphia for that reason.
Really? That's cool.
Because of what you're saying. Boston too, right? There's just a lot of U.S. history, New England history in both of those places.
78 is probably a pretty good level here in the old Carpenter Technology Corp.
It's a really nice base. Right? We talk about these formations a lot. And I think that like the biggest thing is to be patient with something like this, because when this thing goes, called 78, those early 2000, or no, those are the pre-financial crisis highs. When it finally resolves higher and takes that level out, typically you get a monster leg higher. But these formations, they're often slow movers, false starts, right? A lot of sideways before you get that move. So what are you saying? 78 for confirmation, but you can start to build a position Yeah, I like that too. The point is the base is completing here.
This is how the sausage is made, folks. You know what I'm saying? This is how the sausage is made.
It's not
But
always super clean.
no, in fact, these messy starts, you get explosive breakouts after a few false starts. See it all the time.
Yep.
And you know, obviously, the stock's pushing up against new all-time highs. You know, this could potentially be an all-time monthly closing high
I'll
for
also say,
Carpenter.
yeah, metal fabrication, it's industrials, but it's also kind of materials. These are the stocks that I'm looking to. JC and I keep talking about it.
Well, let's do some channel checking over 1735 Market Street, get some cheesesteaks, you know?
This is one of those groups that we would expect to play catch up, right? Or join in more.
Listen, in a bull market where you get sector rotation, this is one of those sectors that get rotated into, you know?
Next one.
And, I mean, industrials, I mean, have been leaders.
All right, next one. We talk a lot about these retailers. I'll bet Morgan likes this one. Williams Sonoma, WSM.
So the original Williams Sonoma is actually in Sonoma. It's got like this little plaque. It's right on Broadway, right next to the Sonoma Plaza. And it's got like a little plaque, the first Williams Sonoma.
No kidding.
Fun fact.
I mean, this one, when you zoom out, wow. Huh?
How do you feel about that? 180 looks like a good level to me, huh?
Yeah.
Right? So let's see. What do you think Williams Sonoma market cap is? My guess would be 12 billion. See how close I am. What? 11.74 billion. Damn, that was pretty good.
That is good.
That was pretty good. Listen, sometimes I impress myself. That was a good one. That was a really good guess.
All right, so
shout out to JC on that one.
180, 285. I like that. It's a strong stock when you zoom out. Eric is next. We talked about this one a little bit today. AFRM. This is a firm. This is that buy now, pay later, or maybe pay never stock. You like the base? Is reversal in?
How do you not like that base?
I need a 200-day moving average here.
Why? So you can ignore price and look at a lagging indicator instead?
No, I think it'll make the price pattern more clear. Probably this sideways trend has resolved into an uptrend.
I mean, I guess it looks like an uptrend to me that goes back over a year or about a year, right? Yeah, about a year, almost a year. Really got going in the spring. Higher lows, higher highs. I mean, man, I think this is a dead shot to 40.
Okay, I like it. Hate the company.
We're about halfway there now, so it's it's right in the middle of that range, right? So you're looking at 23 and 40.
Yeah,
right.
It's fine.
40's your resistance for right now, and 23. And by the way, you know what this reminds me of? Not that we need to beat a dead horse again with this Coinbase, but it kind of reminds me a little bit of this Coinbase because Coinbase kind of, but I'm not saying it isn't, but Coinbase kind of had a little similar situation where, right, when it was here, like its next target was that former resistance, right? Now there's a new trade against those levels. You know what I mean?
So that's kind of what I was saying about the 200-day. These bases aren't always super clean, right? But if you kind of like zoom out or like let your eyes glaze over a little bit, it's more the essence of the pattern that it is slowly transitioning from something that moves lower to sideways and then higher. And you can see that in both of these. Hey, let's mix in some international.
Yeah, I see Eric here wants us to look at the old Poland.
Yep.
Man, the zloty, man. Dude, the zloty has been the tell all along. If you have not been watching the Polish zloty.
Okay, so what does that mean for this fund, though? Talk about what strength from the home country currency would mean for a fund denominated in US dollars.
It's more a function of the fact that emerging market currencies have been doing so well since early October as evidence of dollar deterioration underneath the surface has been incredibly bullish for years now. So
Okay.
the Polish zloty is just one example of emerging market currencies that are not in the dollar index. So it has zero weighting, yet indicates weakness in the dollar, which is bullish for stocks. And Poland has just been one of the stronger emerging market stocks. So it's like a double whammy, right? So I'm more interested in the evidence of risk appetite versus the sort of currency implications of the ETF versus the dollar. You know what I'm saying?
Yeah, but at the same time, I think it's important to point out and acknowledge that it's no coincidence that the zloty has been going crazy since early October, and EPOL, if you overlay it, has also been going crazy and ripping higher, right? So there's a currency component when you invest in these international ETFs, where what this fund is ultimately doing is it's buying stocks on the local stock exchanges in Poland in zloty. So you are making a bet on that country's currency when you buy this fund. And for the past 2 months, big reason why this EPOL looks as good as it does is because the zloty, to the point that you've been making almost every morning on our show, has been ripping, right?
There's your zloty right there.
Right. Do you think maybe we are in an environment now with the dollar unraveling from what looked to be a nice reversal pattern earlier in the year, falling back into that old range, really looking weak for the last month and change now? Do you think we're entering an environment that's more conducive to some of these international plays?
Well, I mean, look at, European banks making new 52-week highs, man.
Sure. Yep.
I mean, hello.
Yeah.
You know what I'm saying? Like, it wouldn't be anything new that these international companies are working. You know, we talked about, Lind, not an American company. Look at UBS making new 15-year highs.
Well, hold on. Let's keep it on this theme. We got one from the chat that's definitely not based in the US. TAL Education Group, ticker symbol TAL.
You know, it's one of these situations, right?
Yeah. So these online
big bases
just continue to move higher.
What are they educating people on, out of curiosity? Do you know?
They're just selling education on the internet.
Like what kind of education? Like how to use Excel, or like how to speak French? Like what kind of education?
Yeah, good question. Most of them, from what I know, do a very broad array, broader than, the biggest universities. Because think about it, you can scale in a different way when you only offer online education. So they offer almost anything, the good ones. And it's not just a theme that we're seeing internationally. Definitely TAL, EDU is another one from China that's working. But if you look to the US, LRN is working, and there are others. I forget the ticker symbols. But the whole space.
How did this thing go from 90 to 1? That's crazy.
Accounting. This was one of those names embroiled in, I think it was bad revenue accounting. Revenue recognition fraud.
Got it.
Yeah.
Really interesting. Fascinating. This thing got slammed, dude.
So did EDU. And this is something that's not unusual for these Chinese names, for them to fall 50, 75, 90%, because it turns out that, they were accounting for things wrong, because they're not audited like the companies that we're used to buying and selling here.
Scam artists.
Yeah. So are you buying it? We've been long.
Yeah. Yeah. I like this. I like this above like 10.5, 10, 11, I mean, for a squeeze back up toward, you're looking at a potential double from here, back up to these former levels up here.
And if you looked at a daily, JC, or even a weekly, when you say squeeze, it's because there's very little price memory
right,
in the gap that we're entering right now. Like the stock just collapsed through this level. Yeah.
Right. So you basically fill that vacuum is really the trade,
Yeah.
I could totally see it.
You would think of this the same way as a gap.
Yeah.
Okay. So we got more. A lot of great requests in the chat today. WIT. I don't know what this one is.
WIT, this is a $25 billion tech company in India, Bangalore.
Ooh.
So here we're looking at an interesting ADR. WIT, WePro. Oh, yeah, it's WePro. Oh, yeah, we know this. Yeah, of course. Well, not the S&P
I don't know.
500.
I don't like that getting cut in half.
Yeah. It's a
And
little
then
too messy for you.
yeah. It's just a lot of bases look a lot better than this one.
Yeah. I mean, realistically, if we start we got to start getting above these highs from back here for me to get excited about this one, right?
And
We start holding above, 570 or so, 580. Now we're talking, but it's messy underneath the surface. But above that, a little scoop and score here. I've seen worse trades, right? Kind of like back above that way, something like that.
and
Yeah, I've seen worse trades, 580, something like that.
This is India too, right, JC? Where I don't have to tell you, there's plenty of stocks that are working.
Yeah.
Yeah. So maybe it's a catch-up trade, maybe it's a mean reversion type play, but there are stronger stocks in this group.
Yeah, I think so too. In both technology and in India.
Yep, 100%. Speaking of technology, let's go. Actually, we'll do Palo Alto, PANW. Then we'll jump right to ANET. Both are doing things in AI. Palo Alto, we like a lot. It's a cybersecurity leader. Looks as good as any chart these days. Yeah, nice. Talk about secular leadership. You could even zoom out more. This one has been good for a long time, just steadily stair-stepping higher. Yeah, look at that.
So not a downtrend. Right. Listen, I think there's a few different ways so you could take advantage of this. Let me just throw up where's the
there are so many good looking charts in this space right now.
Those are our levels,
Yep. Totally.
Yeah, there are a lot of good looking charts in the space. You look at cybersecurity sort of in general. Cybersecurity in general.
Yep.
I mean, look at that. So this is hack.
You see that beautiful reversal.
You see this beautiful reversal.
Yeah.
And then getting back above a key level. Right.
Yeah, and these stocks are more or less getting the benefit of the doubt. We were talking about Zscaler, ZS, which is another one that we like a lot and are long in this space. Came out with not the best earnings today, and the street is pretty much looking through it. It's rallied all day, pretty much flat now. It's being down a couple percent this morning. So yeah, so you see the downtrend and the big reversal, and now it's higher highs and higher lows, baby. Let's go.
So we could probably get back up towards, at least for now, back up towards 60, right? These former highs up here.
It's a question of time frame too, right? Like a lot of these reversals, once they're in, these are primary trend type chart patterns. So I almost think you're selling yourself a little bit short to buy one of these beautiful textbook reversal patterns and then sell before you get back to those old highs. If you have a long enough time frame, don't you want 66, 68, wherever it was a few years ago from something like this?
Yeah, it's probably going to get there. I think, like you said, time horizon. I think it's not going to be so clean. I think there'll be some trouble there, but yeah, I think we can get there. Sure. All right, last one. What do you got?
ANET, Aristanet. It's an AI name.
Yes. Someone's been hanging out at the new 52-week high list, huh? Beast. I mean, what can you say?
Doesn't get talked about so much. Like the other AI stocks.
Why is it AI?
Which I like.
Why is it AI? It's hardware. It's like AI hardware stuff.
I don't think so.
Well, it's a hardware company, so what are they doing for AI?
Don't know. I thought it was a platform.
Pretty much what it looks like right there. Right.
So you got a level there, 210. It's been following the fibs. Pretty clean.
Yeah. Yeah, that's what that looks like.
Nice.
Yeah. Yeah, 210, 316 level. Sure. Why not? Below 210, it's probably going to be in this range, but above 210, yeah, sure. Why not?
And it bottomed
ANET.
out. Yeah.
I like it. Arista Networks, 67 billion. It's not nothing.
Nope.
Not nothing.
Any final thoughts before we sign off for the day?
My final thoughts are, have an open mind in the market. You can be incredibly bearish, and the data would suggest that is just a wrong thesis, and you should be more bullish and looking for stocks to buy. And at the same time, you could think everything's great and the market's going to go up forever, and the data starts to change and would suggest that a more defensive or even bearish approach is best. So market goes in cycles. It doesn't go up or down. It goes up and down. So I think it's important to recognize that. Look for relative strength. Look for relative weakness. Reverse engineer what a bull market looks like and see if those things are happening or not. Those are that's what I'm doing.
And you want to be open to a lot of things in this kind of market, right? Where we're seeing breadth expansion and more kind of stocks and subgroups join the party. So
Baby.
All right. Thanks. I think that's great advice, JC. This was fun. As always, we'll be back on Thursday with the next Chart Request Live, 1 o'clock. And we're here every week, Tuesday and Thursday. Join us on the morning show, 8:30 to 10 every day. All right. Thanks, everybody, for joining.
That was fun.